always keep on reminding you of what audit and assurance is. Now, I don't want to go to definitions here, but most importantly, anytime you are given any assignment to audit, for example, today, 𝒬𝒐, which is a registered audit firm in Kenya, is given a job to audit 𝗍𝒂𝒄𝒄𝒄. Yeah, Nike International. Then what will I do? Of course, I've got other clients, right? Yeah. So then the very best thing to do is to take Nike project as an independent project. So I'll be able to open a file for the same. And if it's a project like the way we normally do with the building and constructions, there must be plans, architectural plans, structural plans. There must be a QS who comes on board. You must be able to foresee, hey, this is the building that I'm going to put up. All right. And once you are able to foresee and plan nicely, then you go to the next step, which is the execution. So execution, you have the contractors, they keep on building the house. As they build the house, they must always keep the owner of the building and other stakeholders, like the Institute of Engineers of Kenya, county governments, national government officers. We must keep on producing what we call reports. Reporting, very, very important. So any project will always have a planning phase, an execution phase, and then lastly, we have what we call reporting phase. The same case with audit. As I've told you, audit shall always be taken as a project. We shall have a planning phase. In the planning phase, what are we required to do as auditors? We are required here to come up with what we call an overall audit strategy. Yeah, in the overall audit strategy, you must be able to define the nature, extent, and the timing of the audit procedures. Nature will be what types of procedures do I need for this particular account balance. Nature, types, extent, depending on how strong the internal control systems are. If the internal control systems are not very strong, it means as an auditor I have to do a lot of work. So the extent will be deep or will be more. And then the timing, depending on the kind of organization I'm auditing. Ladies and gentlemen, I may be forced in this case here to do what here? I may be forced to have what we call interim audits in between the year audits and maybe final audits. If it's just a small organization that I'm auditing, then I can just wait for them to do their financial statements. Once they've done their financial statements on the 31st of, say, December 2024, then they'll be able to hand them over to me, say, in January 2025. I audit them, and then, of course, I give an opinion. So the timings, really, we call that approach the famous NET, nature, extent, and the timings of audit procedures. Now, from there, ladies and gentlemen, in the planning, I will also be expected to come up with what we call a detailed audit program. You see, there is a difference between a detailed audit program and an overall strategy. You see, overall is an umbrella. Yeah, it's broader. Yeah, in this case here, you don't go into specifics. But audit program, the detailed one, you must get into specifics here. You must be able to know for this firm called Nike that I will be auditing, who will be the engagement partner. Yeah, who is going to do what and what? All right, what resources do I need? How is my budget going to look like? That is what we call a detailed audit program. A detailed audit program. So we have finished planning, then we go into execution. So execution, remember, I've always kept on insisting, and these will always be examined, whether you are doing intermediate or advanced level. At the execution step, my firm, audit firm, 𝒬𝒐, what do we do? Very, very practically, we normally appraise this organization of two things. First of all, we check what we call internal control systems, ICS. Internal control systems are those umbrellas, yeah, that in this case you put over your head to ensure that you are not rained on during some rainy time. So the same case, organizations will need always to put in measures, to put in protective measures to ensure that during the rainy timings, they are not rained on. Which kind of rain am I talking about? Remember, I always keep on telling you, over 70% of employees go to their workplaces every morning with an intention of stealing. So if you don't protect your resources in the company, then automatically you will not be able to achieve your objective as an organization. So you need those protective mechanisms. As an auditor, remember, in terms of ICS, I'm required to understand internal control systems, document them, all right? And then, of course, evaluate them. Yeah. So if, for example, I go to a school like RCM, they tell me that we've got a soldier at the gate who is able to ensure that every student who goes to class, they are able to pay their fees. So you see that one, for example, if it's RCM that has been able to put that internal control system, as an auditor, I don't put internal controls for you. I will simply come and listen to you. I understand your internal controls and what their objectives are. I would want this soldier to help us collect 100% of our fees. All right. So then I will be required here to document. All right. From there, I will be able to evaluate the design. Was this really the very best internal control system? Or in this case here, would we have any better? Because at the end of the day, I have to give recommendations. So I have to look at the design, because if you ask me, when you have a soldier at the gate, anybody coming, for example, a beautiful lady has passed over there, at the end of the day, this soldier may allow this student to go into class, all right, without really looking at the receipts, all right? Human beings get tired. This gentleman, having stood there, say for 3 hours, he'll drop the guard. Yeah, and then it'll now be allowing people to get into class. So the better design would have been, if this is a big college like now RCM, we should be able to automate the fees check process. Just to have a small, for example, you're giving these people the cards, and then you have a card reader. Yeah, this student simply comes and swipes their card. If they have paid their fees, in this case, we have the system opening up the door for them, they go to class. That would be a better designed system. Right? So I'm evaluating the design, I'm evaluating the control effectiveness. The soldier person there, of course, is not effective, which I'll be able to give as a recommendation later on. So, but we are saying in the execution, the first thing I do is to look at the internal control systems. And then, ladies and gentlemen, still in the execution, I will have to do what we call substantive tests. Substantive tests. Substantive comes from the word substantial. If the internal control systems are not working very well, then I'll be able to do a lot to test the numbers now. Yeah, I'll be able to do a lot of work, which in this case here means what here? Substantive testing. Yeah, and then of course at the end of the day, I will be giving a report. I'll be giving a report. So I would want to get feedback from you, great students of mine, because I can see the number is going up. From my explanations, are you able to pick something? Are you able to understand? Are you able to understand? And remember, you don't have to make any notes. You can simply turn on the AI, and the AI will be able to take the notes for you, which of course is sent in your emails. All right, great. But are you able to follow me? I would want to get a feedback. I would want to get feedback from you, ladies and gentlemen. Are you able to follow my explanations as I continue? Are you able to follow my explanations? I would want to hear this from you. Nobody's talking to me. Nobody's talking to me. Nobody's talking to me. All right, ladies and gentlemen. Great. Great. So today we are looking at substantive tests over property, plant, and equipment. Yeah, it is lecture number 26. The students, of course, who are studying at RCM, most of you guys must have attended all my lectures. Since we began, I've done 25 lectures. So if you are at RCM in the paid groups, I believe you must have attended all of them. And should you be able to go to any interview, thank you so much. Great. So then now we are looking at lecture number 26. Whatever I'm teaching you here, ladies and gentlemen, should you go to any interview, automatically you'll be able to score highly. That is the beautiful thing with audit and assurance. It makes you understand business processes. So lecture number 26, substantive procedures for property, plant, and equipment. Ladies and gentlemen, before I go on, I will have to remind you that these substantive procedures, whenever you hear about them, always remember the acronym 𝒂𝒐𝒃. Those are the five substantive procedures. The substantive audit procedures are 𝒂𝒐𝒃, where A stands for analytical procedures. A stands for inquiries and third-party confirmations. E or I stands for what here? Inspection. O stands for observation. U, at least there is a U in between this word, recalculation. And we also talk about what here? Reperformance. So I repeat, 𝒂𝒐𝒃. Anytime you hear about audit procedures, auditors, like some of us who have these licensed organizations outside here to carry out audit, it's a big honor, it's a big privilege, and I would want every student, and I always tell you, please, as you go to the advanced level, those students who are in the advanced level, audit should be your choice, so that in the future, you'll be able to get this audit license. Yeah, I know that's controversial, but audit should be what you choose, because audit will expose you to so many things. You know, most of you in the next 2 to 3 years, you shall be CEOs or CFOs. So if you don't really understand the audit very well, you'll not be able to be an assurance advocate. You'll not be able to know how to protect the shareholders' resources. So I know tax is a very good area, but the very best subject, if you ask me, if I was a young man today, I would think about audit and audit and audit and audit, nothing else. Yeah. So then today we are looking at these substantive procedures over property, plant, and equipment. IAS number 16, International Accounting Standard number 16. So and I've started by explaining that anytime we are told or called upon as auditors to put in our audit procedures to be able to discover whether we have material misstatements in the financial statements. Misstatements means errors, frauds. Yeah, that the PPE figure was supposed to be 70, but these directors have booked it as 80. So they want, in this case, here to overstate. So then as an auditor, to be able to catch them, to be able, in this case, ladies and gentlemen, to look at our numbers like surgeons, with our scalpel, then we must always think about the 5, let me call them 6 audit procedures. 𝒂𝒐𝒃. I have to do analytical procedures. Analytical procedures, I'm computing ratios. Analytical procedures, ladies and gentlemen, I'm doing comparisons between our company and our competitors. Yeah, when you tell me, for example, like this is RCM, whose assets are worth 16 or whatever, and then we have an equally type of size of a college, which has got assets worth 100. Yeah, you know, those comparisons will help us. Yeah, an analytical procedure shall be doing what we call YOY, year on year. We take the PPE for 2024, we compare it with the PPE of 2023. It is why or why year-on-year comparisons, they'll be able to help you discern the trends. All right, that's analytical procedures. A is for inquiries and third-party confirmations. So inquiries, as an auditor, you know, I'm searching for evidence. I will have to inquire quite a lot. I have to speak to people internally and externally, right? So when I come, for example, to the directors, ask the directors, how much were your receivables? Of course, they have shown this to me on the financial statements, but I have to keep on, interviewing them. Because as an auditor, I'm supposed to practice what we call professional skepticism. Under professional skepticism, I'm supposed to doubt everything these guys are telling me for me to be able to dig and get more evidence. Under professional skepticism, ladies and gentlemen, I'm supposed to be having a questioning mind. And that is why audit and assurance is never a subject of those introverted individuals. Yeah, if you are really like a very reserved person, then don't do audit. Because audit has got a lot of what here? Questioning, doubting. All right. So remember, if they have told me that these were our receivables, not a problem. One of the things that we must always know as an auditor, we always prefer external evidences. External evidences are more reliable than whatever that I get here internally. So having gotten this information from my directors, not mine, but the directors of the company, remember myself as an auditor, I'm always independent, right? Having gotten those figures, then what I will do, I will request for permission to do what we call data's circularization. I'll request for permission from the client because of data privacy, right? Yeah, so I get consent from the client for me to circulate, for me to send my circular to the debtors, to the receivables, for them to confirm their balances with us. I don't have to send those circulars to all receivables. No. What I'll just need is a receivables ledger. If the receivables ledger has got, say, 1,000 customers, as auditors, we work with sampling. So I can select, for example, 10 customers. These 10 customers, I do a letter to them. It could be a physical letter or an email, all right? And then I request them to confirm their balances with, for example, this company that I'm auditing. Of course, out of the 10, some ninjas may not reply. But out of the 10, I'm assured of getting like 4, even 5, telling me, hey, I am owed like say 10 million, other one 20 million, like that. So if the figures they are giving me, they are tallying with the figures the directors are giving me, then now I have the comfort, I have the assurance that in this case here, that figure in the financial statement is correct, Remember, ours is confirmations. Yeah, confirmations. So we have A for inquiries and third-party confirmations, and then now we have I. I stands for inspection. Inspection, you are using your eyes, yeah, to, in this case here, check on assets physically. Yeah, you are inspecting, right? You are inspecting, right? Or documents, especially when you are doing what we call vouching. Yeah, trying to trace a particular, for example, asset to a particular invoice, to the general ledger, for example. So when I'm tracing like that, I'm using my eyes to see, you've told me you have a vehicle. Great. Then where is its logbook? They give me the logbook, I'm inspecting. When they give me this logbook, I'm checking in this case here with the government authorities. You know, an auditor, you must always be one step ahead. Hey, where are your academic papers for this person here? They are here, right? Hey, these academic papers I write to NEC. Tell NEC I can see a ninja here who is telling me that they got an A plane in high school. Do you know this ninja? Then they'll tell me, we don't know this ninja. Because ours is about being very, very skeptical to make us gather what we call sufficient, appropriate audit evidence. Sufficient, appropriate audit evidence. All right. So then we are at A inquiries and the third party confirmation. We shall do a lot of third party confirmations. Ladies and gentlemen, if we go to an organization, this organization tells us that they had 100 million in their bank accounts by end of year 31st December 2024. Not a problem. At face value, I will assume, I will want you even to think that I've really taken in your word. But later on, you will get an email from our and company auditing firm telling you kindly, as much as you told me that you had this balance, not a problem at all, but as auditors, external confirmations are more reliable. Give me a chance to talk to your bank. So they write to me, of course, even copying their bank, that this particular person will be reaching out to you to request something. Then I'll be able to do an email to the bank, etc. So that comes. So of course, the directors, I would want even to inspect like the bank statement. I would want to go and see that figure bank, but the auditor's mind knows that even bank statements can be forged. Because I mean, this bank statement is not coming. In most cases, people are forging things outside here. We know this. There are even clients in this case here we go to represent at KRA. Imagine a client, and it's a big company. You go to represent them at KRA at the tribunal, Kenya Revenue Authority at the tribunal, all right? Then you realize that these fellas had given fake bank statements to KRA officers. Yeah, people are forging these things. So then as an auditor, you need always to use your eyes very, very well. Look at the vouchers, look at the invoices, look at the local purchase orders, look at, in this case here, any information, goods received, notes. Yeah, check them. Try to compare numbers. So we have RAE, inspection, very, very important. And then now we have, in this case here, what we call observation. Observation, again, you're using your eyes, but this time around to see men and women in action. To see, in this case here, even these physical assets, if they are moving, for example, is it working? All right. That is observation. You're observing things happening here, things in action. For example, when I go checking on employees as they count their stocks, I'm doing in this case here both observation and inspection because they're doing something. Why inspection? Because, for example, we have the stock count sheets. Yeah, the stock count sheets with the instructions. I'm reading there, I'm inspecting. All right. Even themselves, they're documenting things. We have found this is 60. We have found this is 70. So I'm checking here. I'm seeing. But most importantly, there is an activity going on. There is an action going on. That becomes an observation. And then I'll be able to give a report as to whether whatever I observed, right, was what was intended. All right. Then lastly, ladies and gentlemen, as an auditor, we have the U. At least I told you in this recalculation inside there, we have a U. As an auditor, we must be recalculating so many things. I'm not stupid as an auditor. I'm so sure you, even yourself, you know that we are on the opposite sides of this game. It's like football. We have Man U here and we have Arsenal here. There is no way you'll be able to trust these Man U people 100%. You must have even started investigating them last year to see, for example, what's the strongest kicks, which kind of goalkeeper are we going to put here. So as an auditor and the directors on the other side, I'm so sure these guys would want to dodge me. So I don't want them to dodge me. All right. So when they tell me that, for example, this was my depreciation, I will tell them no problem. Please give me the property, plant, and equipment register. Give it to me. Tell me the depreciation assumptions that you used, methods that you used. Did you use straight line? Did you use reducing balance? Give me the useful lives of your assets. Then when they go, they do that, I'll be able to now cast the entire working on my Excel or on my audit software, like Caseware. All right. So I'll be able to cast, I'll be able to recompute. All right. Yeah. So in this case here, we are recalculate to be able to confirm whether these people, whatever they told me, is correct or wrong. So then whenever we talk about this very, very important thing, please listen to me. And this one, I can tell you, I've marked exams. I've marked exams. Audit and assurance, advanced auditing and assurance, at the intermediate level, at the advanced level. If you don't understand these substantive procedures for each account balance, you will never pass. I've gotten students who tell me that, Mwalimu, now I'm failing this paper for the 7th time, and yet my English is very good. It's not about your English. It's about audit language. Audit is a technical concept, is a technical subject. So substantive procedures for property, plant, and equipment, relevant standard is IAS 16. You don't have to quote them, especially if you're not very sure about them, don't quote them. But of course, a good student who understands relevant international accounting standards and IFRSs, if you understand them very well, when you quote them, you demonstrate broad and deep understanding of the subject. So financial statements area is statement of financial position, specifically what we call non-current assets. Number one, understanding PPE. Whenever they talk about, ladies and gentlemen, PPE, what comes to your mind? What qualifies, first of all, to go to the PPE register of any organization? Remember, PPEs are assets. Never forget the definition of an asset. You as an accountant, an asset is any resource that you are able to control. If you're not able to control a resource, then automatically that is not your asset. You must be able to control it. Yeah, and as you control it, it must be having benefits today and in the future. Yeah, economic benefits will be able to come in as, of course, you try to control this to the best direction to meet the objectives of the organization. Then we expect, ladies and gentlemen, that we shall be able to get economic benefits, where economic benefits basically are cash inflows or savings in your liabilities. Yeah, you'll be able to get some economic gains. And then most importantly, for these assets here to be in your PPE, to be in your PPE register, we expect them to give you a benefit that spans for more than a year. They must be long-term assets. Otherwise, if it's a mouse that you have bought here today, and this mouse in this case here will be crashing over the other day, or a month or something like that, then that expenditure should be taken to the P&L as an expense. Now listen, 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 listen. So we are told here definition, PPE refers to tangible, non-tangible you can touch, non-current assets held by the entity for use in production, supply of goods or services, for rental or administrative purposes, and is expected to be used over more than one financial period. Examples: land, buildings, machinery, computers, vehicles. As an auditor, I must understand the key documentations. When I come to audit your PPE, I must be able to get what we call an asset register. It could be Excel-based or even system-generated. Then I expect you to be having that figure in the general ledger, the GL. It is from the GL that we normally pull what we call a trial balance. When you are buying these assets, you must have, in this case here, been invoiced. So I expect to get invoices to confirm the cost, the initial cost. Ladies and gentlemen, I expect you to give me depreciation schedules. Tell me, ladies and gentlemen, at the end of the day, these are a computed, but I would expect you to give me those Excel workings. Yeah, and then of course we have the title documents. Is it a logbook? Yeah, is it a land title? I need the title documents to confirm what we call rights. Do you have the right to this particular asset? If you have the right to the asset, then automatically you must be having a title. Now, ladies and gentlemen, relevant assertions for PPE. I told you the PPE, of course, this falls under what we call statement of financial position. Statement of financial position. Yeah. Remember, I gave you acronyms. Acronyms. You don't if you don't understand assertions, then you will never ever pass audit and assurance. Yeah, and I told you what assertions are. They are claims. Claims being made by who? By directors, by managers of an entity. When they give you financial statements, they are claiming that, actually proclaiming, because they claim in advance, that their financial statements are accurate. They are not accurate in most cases, that they are complete. All right? That they have followed what we call cut-off procedures. So those assertions are divided into two. We have, ladies and gentlemen, assertions for the statement of financial position elements, and then we have assertions for P&L items. For the P&L items, I gave you an acronym. Yeah, we said for the P&L, use this concept of 𝗂𝒑. Okay, so in this case here, we have a 𝗂𝒑. This is for the P&L. 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 All right, profit and loss. All right, so whenever we talk of profit and loss, ladies and gentlemen, we are looking at assertion of occurrence, assertion of completeness. All right, we have a assertion of no, that is full, that's full. Now I'm very specific with the P&L. P&L, we use 𝗂𝒑. So assertion of in this case here, completeness, assertion of cutoff, assertion of accuracy, and then we have assertion of presentation, that they have been presented correctly in the profit and loss account. And then now we have what we call assertions of the balance sheet. Assertions of the balance sheet. Balance sheet is our statement of financial position, balance sheet. So assertions of the balance sheet, we normally talk of 𝒑𝒕𝒖𝒓𝒆. Yeah, 𝒑𝒕𝒖𝒓𝒆. 𝒑𝒕𝒖𝒓𝒆. So balance sheet, like assets, you'd want to know, do they exist? E stands for existence. Have they been valued correctly? So valuation, very, very important. If there are assets, do you have rights to them? If you have rights to them, then you must give me ownership documents. All right? Are they complete? Because at times you'll go to audit, like that time I was auditing some international organization, huge organization. You realize physically you are seeing an asset, but when you trace it to the ledger, when you trace these to the assets ledger, it's not there. So the asset ledger, the assets figure is not complete. Then of course we have P for presentation and the disclosures in the notes. How has it been presented in the books? So you must always understand those assertions on that approach. Yeah, very good. Ladies and gentlemen, please listen and listen to me very well. So when we talk of statement of financial position, 𝒑𝒕𝒖𝒓𝒆, existence, assets recorded actually exist. Rights, entity has ownership, control over the asset. Completeness, all assets are recorded. Valuation and accuracy, they work together. Asset values are correct and properly calculated. Cost and depreciations. Presentations, assets are correctly classified and disclosed in the financial statement. Ladies and gentlemen, remember I told you, and this is what defeats so many students in this subject. I told you assertions are what a goalpost is to the footballer. If you go to audit outside here and then you don't know the assertions you are auditing against, that is akin to somebody who is just running all over the field with the ball, dribbling nicely, but they don't have a goalpost. So where are you going to score? Not unless you tell me, like now, for those of us who are now working out to at least reduce weight, that you're just running. I mean, there are people on the ground here who would want, in this case here, to they're spectators, to see you scoring. As an auditor, there are people who are looking at you to see you scoring. We have the shareholders who have given you the work. And you can only be said to have scored if you audit against correct assertions. So when I'm marking your script and I'm saying you have been told to audit sales, and then you start auditing sales against assertions of a statement of financial position, then straight away this student gets like almost a 0. Straight away. And that is why even last semester, the students telling me, Mwalimu, I was really very good in this subject, but I mean, what happened? Why did I fail? It's because you are missing out on this concept of assertions. You must understand. So whenever you hear assertions of the balance sheet, assertions of the statement of financial position, always remember 𝒑𝒂𝒄𝒄𝒄𝒃. Yeah, 𝒑𝒂𝒄𝒄𝒄𝒃, very, very important. Yeah, so the C here is completeness. All assets are recorded. Valuation, they have been valued correctly. Presentation like that. Now we go to the substantive audit procedures by assertion. By assertion. The first assertion is existence. So then how do you prove that these assets exist? Now you remember my substantive procedures of A-E-I-O-U. Those things can be a bit confusing, but when you use this approach of acronyms, you can never go wrong. So for example, existence, do these assets that you're telling me you have on your financial statements, do they exist? How do I check existence, ladies and gentlemen? To check existence, you can see here, select samples from the assets register and physically verify on site. So go there and do observations. Yeah, the procedure here is to go and observe. The purpose is to confirm assets are physically present. How else can I confirm existence? By looking at the invoices. If this asset exists, we purchased it, we must have been invoiced. Yeah, so inspect invoices for sampled PPE items to confirm acquisition from third parties. Ladies and gentlemen, it doesn't stop there. I can still go and inspect the bank statement to see if it's a newly acquired asset that is really, really significant, to see whether the exact amount that is invoiced is the exact amount that went out of the bank. Existence, very, very important. We are using our eyes to go and see the assets physically. We are using our eyes to see documents, Yeah, to see documents. And it gets even better for us, ladies and gentlemen. You know, they normally keep like now the fuel logs. Yeah, like when this, like if they are heavy machinery, even vehicles, they have their own fuel logs here. Yeah, they'll say, for example, this vehicle got this fuel on this day. Yeah. So even in terms of whether these assets are moving around, as an auditor, I'll be able to ask about that, and I'll be able to know, even at times get to talk to their drivers. Yeah. Yeah. Because what happens outside, ladies and gentlemen, you realize people would want to show a situation where they have a lot of assets, physical assets. They have landed buildings, etc. But when you go to the ground, things are normally different. Things are normally different. Things are normally different. So we must use our eyes very well. Great. Ladies and gentlemen, we go to the next one. So the next one, what do we have here? We have accuracy and evaluation. So for valuation, we must, so for entities that use cost model, these are those entities that have what we call net book value. Net book value is cost minus all accumulated depreciations. Yeah. Minus cost minus accumulated depreciations. So procedure, if you are looking at the cost, then agree purchase cost of sampled PPE items to supplier invoices to see that that cost was captured correctly, to confirm the initial cost accuracy. Then, of course, because it is cost minus depreciations, you must recalculate depreciation for selected items. Why do you do this? To verify accuracy of depreciation. Then, ladies and gentlemen, you have to inspect asset register for fully depreciated assets still in use. Here you'll get some people who have assets whose net book value equals 0. The net book value equals 0, but at the end of the day, those assets are moving around. They're working. So as an auditor, this will worry me as to whether these people are doing the mathematics correctly or as to whether they gave me a wrong useful life. So inspect asset register for fully depreciated assets to identify potential understatements of net book value. Compare depreciation policies with industry standards. So ladies and gentlemen, in this case here, what am I doing? This is analytical procedure. Yeah, I'm doing benchmarking. Yeah, in this case, I would want to see why is RCM College using straight line method, whereas 𝒬𝒵 is using, for example, reducing balance. So compare depreciation policies with industry standards to assess appropriateness of estimated useful lives. Assess whether depreciation policies match the asset's actual usage to ensure policy is fit for purpose. Yeah, you don't have to cram. I don't want anybody who comes to my class to cram audit. No, there is what you happen to catch in my class, which will really help you. For entities using the revaluation model, the revaluation model is now where you call in valuers. Yeah, so when we call in valuers, then we have to know the valuers who came on board. Were they independent? And were they qualified really to do the job? Do they belong to the Institute of Valuers of, for example, your country? Yeah, so in this case here, for entities using the evaluation model procedure, obtain and review the latest independent valuation report. To confirm fair value basis is supportable. Fair value means what your market value. Yeah, is it supportable? So obtain and review the latest independent valuation report, evaluate qualifications and independence of the valuer to ensure competence and objectivity. Then C, under the 𝒑𝒂𝒄𝒄𝒃, we have R for rights. Do you own this asset? So the procedure here, the audit procedure, yeah, the substantive procedure is to obtain title documents for sampled, not all of them, sampled PPE, e.g. title deed, logbook, lease agreement, purpose to confirm legal ownership or control. D, completeness, select PPE observed physically at the floor or at the ground there and trace them to asset register and the general ledger. Yeah, so all those assets that you, ladies and gentlemen, that you saw at the floor. Yeah, I saw in this case here a Honda Vitz. Yeah, so you go back to the asset register to see whether it has been booked. In most cases, these directors, whenever they want to steal from assets of a company, they will start omitting them from the registers. They will not record them. So the registers will be incomplete. To confirm all assets are properly recorded, what we call flow to sheet, you confirm completeness. Yeah, flow to asset register, this is the sheet. You confirm completeness. Now we go to E, presentation. Review the financial statements to ensure PPE is classified under non-current assets in the statement of financial position. Review the financial statements to ensure PPE is classified under non-current assets. Yeah, you know, ladies and gentlemen, things happen. You have procured an asset. Instead of putting this under assets, you even have some people taking this to the income statement and booking this as purchases. It's all about window dressing. They want to hide something for purpose of misappropriation. Yeah, to confirm correct classification and a disclosure. Now, as I finish, additional generic procedures for PPE changes, additions and disposals. So the audit procedure, whenever you are told in this case that there was an addition or a disposal, of course, there must have been a board approval. So obtain approval documentations, e.g. internal memos, board approvals for PPE purchase disposals. So basically inspect. You have to confirm proper authorization. Inspect board minutes for evidence of discussion or approval of PPE transactions to verify governance over significant assets. Let not somebody tell you that that asset was just disposed verbally. A big asset cannot be disposed verbally. We would want, ladies and gentlemen, if it's a material asset, then automatically we would need approvals to see whether these people are really respecting the governance structures of the entity. Key reminders as I finish. Sampling is a standard audit technique. You will not check everything. Yeah, we are not here to do a census. No. Asset register is not the same as general ledger. Yeah, general ledger is up there, but they must always reconcile. Whatever figure you have in the asset register will be the figure on your general ledger. Always ask, which model is the company using? Are you using the net book value approach, which we call the cost model, or are you bringing in valuers to do revaluations? Tailor procedures to what the question gives. Avoid generic answers that ignore context. You've been told in this case here to, ladies and gentlemen, in this case here to give audit procedures for PPE. Don't start telling me every time inspect for this. No. They are the audit procedures against their goalposts, against their assertions. If you don't understand that, again, you'll get yourself, in this case, you're coming back to my class for tuition, which will be very, very bad. I would want you to come back, but at a higher level, yeah, at a higher serious papers. This is not serious. All right. And then use marks to guide your procedures. Whenever you are given 5 marks, you shall give us 5 solid procedures. I always see, like most of these exams, you'll get students in this case who are just writing like paragraphs, like 2 paragraphs, big ones. And then they think that they have exhausted. No. When I give you, ladies and gentlemen, 5 marks, I expect 5 audit procedures against the assertions. Yeah, you can be writing like 3 lines, but I need solid points. Solid points. Otherwise, I normally get so many guys who pass all the other papers, but they get it wrong in audit and assurance at the intermediate level and at the advanced level. So, of course, PPE formula reference, we know that closing PPE will be equal to what we started with, plus additions, minus any disposals, minus depreciation, which now brings me to the end of this session, although I will take a break of about 30 minutes, and then I'll be continuing with our lecture number 27, where now we look at the case question. Remember, your exams are about case questions, especially at the advanced level, even this lower level. Yeah, we talk about case questions. You'll be told in this case here, you are the audit manager, do this and this and this. So now from today, over the remaining sessions, I'll be looking at these case questions often. So I shall be able to resume work at exactly 8. Yeah.